Based on the provided data for Bitcoin, a bullish strategy appears promising. The forecast price indicates an upward trend over the next week, suggesting potential for profit. The support price of $69,030.2 acts as a safety net, while the resistance price of $70,280.8 presents a potential ceiling. Considering this, a long position with a conservative entry price of $69,500 seems appropriate. This allows for entry before the predicted price surge while minimizing risk. To manage risk effectively, a stop loss at $69,000 is recommended. This price point ensures that losses are limited if the market unexpectedly moves against the bullish prediction. The target price is set at $70,500, aiming to capitalize on the anticipated upward momentum and secure profits before reaching the resistance level. This strategy, based on the current price trends and forecasts, offers a balanced approach to capitalize on potential gains while mitigating risk. Given the current price trend and forecast for Ethereum, a short-term investment strategy appears to be most appropriate. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines. The support price of $2,397.4 and the resistance price of $2,476.4 suggest a consolidation period before a potential break below the support level. Therefore, a short position would be advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve entering a short position at the current price of $2,420. The stop loss should be set at $2,476.4, above the resistance level, to limit potential losses. Target price could be set at $2,397.4, aligning with the support level, allowing for a reasonable profit margin. This strategy aims to profit from the short-term downward momentum of Ethereum, while mitigating potential risks through a well-defined stop-loss order. Given the price trends and forecast for Ripple, a conservative investment strategy would focus on a medium-term approach to capitalize on the potential for price stabilization. The historical prices show a recent consolidation phase, with the current price hovering near the support level of $0.5028. The forecast suggests a slight downward movement in the short term, but a potential recovery towards the end of the forecast period. In this scenario, a long position is advisable, aiming for a gradual price increase towards the resistance level of $0.5257, an entry price of $0.508, slightly above the support level, would allow you to enter the market at a relatively attractive price. The stop loss should be set at $0.5028, protecting against a sharp drop below the support level. The target price should be set at $0.522, aiming for a moderate profit within a time frame of a few weeks. This strategy balances risk and reward, allowing you to participate in the potential upside of Ripple, while mitigating the risk of significant losses. Based on the provided price history and forecast for Solana, a cautious short-term investment strategy appears most suitable. While the recent price has shown some volatility, the forecast suggests a slight downward trend in the coming week. The current price is hovering near the support level, indicating potential for a short-term dip. Therefore, a short position on Solana could be considered. An entry price around $165, aligning with the forecast low, would be a reasonable starting point. A stop-loss order placed slightly above the current price, around $168, would help limit potential losses. Target price could be set at $158, slightly above the support level, aiming to capture a potential price drop within the short term. This strategy allows for potential profits from the anticipated downward movement, while mitigating risk through a well-defined stop-loss. Cardano shows a slight downward trend over the past 2 weeks, with the forecast indicating a continued decline in the coming week. Although the price has been hovering around the support level of $0.3262, the forecast suggests a potential drop below this level. Considering this bearish outlook, a short-term investment strategy focused on a short position seems appropriate. An entry price of $0.334, aligned with the current price and slightly above the support level, would allow for a potential profit if the forecast plays out. A stop loss at $0.342 would limit potential losses, if the price unexpectedly surges. The target price should be set at $0.326, slightly below the support level, aiming to capture a profit before the price potentially drops further. This strategy capitalizes on the short-term bearish trend while managing risk through a well-defined stop loss. Given the provided price history, forecast, and support resistance levels for SU coin, a short-term investment strategy appears to be the most suitable approach. The recent price action shows a fluctuating trend with a slight upward bias. The forecast indicates a potential consolidation around the current price levels, suggesting limited upside momentum in the short term. Therefore, a long position is not recommended at this time. A short position could be considered with an entry price around $1.97, aligning with the current price and the upper end of the forecasted range. The stop loss should be set at $2.09, slightly above the recent high, to limit potential losses. The target price could be set at $1.93, slightly below the support level, aiming to capture a potential downward move. This strategy allows for a relatively quick trade with the potential for modest profits if the price follows the forecast. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near its support level of $3.274. The forecast suggests Filecoin could decline further, reaching as low as $3.27. This indicates a bearish outlook in the short term. Considering these factors, a short position is advisable to capitalize on the anticipated price decline. For an aggressive short-term investment strategy, an entry price of $3.34, slightly above the current price, would be ideal. The stop loss should be set at $3.41, aligning with the resistance level. To protect against any unexpected price recovery, the target price should be set at $3.27, the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the potential for a short-term price drop in Filecoin. Based on the provided price history and forecast for Theta network, a short-term bearish strategy appears to be the most suitable. The 2-week price change demonstrates a downward trend, with the forecast indicating further declines. The support price is at $1.021, while the resistance is at $1.128. This suggests that Theta network is likely to continue its downward movement in the short term. Therefore, an aggressive investment strategy would involve taking a short position on Theta network. A suitable entry price would be around $1.10, near the current price and above the support level. The stop loss should be set at $1.128, the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $1.021, the support level, aiming to capitalize on the anticipated price decline. This strategy allows for potential profit from the expected downward movement, while managing risk through a well-defined stop loss. Based on the provided Dogwifhat price information, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend, with a slight downward bias. The forecast further suggests a continued decline, with prices potentially dropping below the current levels. This bearish outlook, coupled with the relatively low support price of $1.29, indicates a higher risk of further losses if the downward trend persists. Therefore, a short position on Dogwifhat is recommended for a short-term investment perspective. An aggressive entry price of $2.20, aligning with the forecast, would allow for potential profit as prices decline. Setting a stop loss at $2.38, slightly above the recent highs, would help mitigate losses in case of an unexpected price surge. The target price should be set at $1.95, below the support level, to capitalize on the anticipated downward movement. This strategy aims to capitalize on the short-term bearish sentiment while managing risk through a well-defined stop loss. Based on the provided data for Stellar, a short-term investment strategy appears to be the most suitable. The recent 2-week price change shows a slight downward trend, and the 1-week forecast anticipates a continued decline. Although the price is near its support level, the resistance is relatively close, suggesting limited upward potential. Therefore, a short position could be advantageous to capitalize on the anticipated price decrease. To implement this strategy, an entry price of $0.0935 could be considered, slightly above the current price but below the immediate resistance level. The stop loss should be set at $0.0950 to protect against an unexpected price surge. The target price could be $0.0900, allowing for a reasonable profit margin while staying below the support level. This strategy focuses on a short-term time frame, aiming to capitalize on the anticipated price movement within the next week. Based on the provided data for Starknet, a cautious investment strategy is recommended for the short term. The 2-week price change shows a downward trend, and the forecast indicates continued declines. The historical prices hover around the support level of $0.3346, suggesting a potential for further price drops. The current price is relatively close to the support level, making it a risky entry point for a long position. Therefore, a short position on Starknet is advisable for a short-term investment strategy. An entry price of $0.345 would allow you to capitalize on the anticipated decline. The stop loss should be set at $0.3566. The resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.329, slightly above the lowest forecasted price, allowing you to take profits before the market potentially reaches major support. This strategy aims to capitalize on the bearish outlook for Starknet in the short term, while managing risk effectively. The provided data suggests a bearish outlook for PENDLE in the short term. The 2-week price change indicates a downward trend, and the forecast predicts further declines. The historical price data also supports this bearish sentiment, with prices gradually decreasing over the past few weeks. Given this outlook, a short position seems to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at the current price of around $4.25, with a stop loss set at $4.525 to limit potential losses if the price unexpectedly rises. Target price could be set at $4.189. The support level, aiming to profit from the anticipated price decline. This strategy capitalizes on the bearish sentiment and aims to generate returns in the short term. Render's price history shows fluctuations within a range. While the recent price has dipped, the forecast suggests a continued downward trend, with prices potentially reaching $4.07 in the coming week. This downward momentum, coupled with the price being close to its support level of $4.221, indicates a bearish outlook for Render in the short term. Therefore, a short-term investment strategy focusing on a short position is recommended. An entry price of $4.40, slightly above the current price, would allow for some initial price movement before entering the trade. A stop loss at $4.563, the resistance level, would help mitigate risk in case of an unexpected price reversal. The target price should be set at $4.221. The support level, aiming to capitalize on the anticipated price decline. This strategy takes advantage of the current market sentiment and the forecast for Render, seeking to profit from a short-term price drop. VeChain shows a downward price trend based on the historical prices and the forecast. The forecast predicts a continuous decline in the price, reaching as low as $0.019. The support price is at $0.01939, which acts as a potential floor for the price. Given these factors, a short-term bearish strategy appears to be the most suitable approach. To implement this strategy, we would enter a short position at the current price, which is around $0.0207. The stop loss would be set at $0.0212, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price would be $0.0194, aiming to capture a portion of the anticipated price decline. This strategy capitalizes on the bearish outlook for VeChain in the short term, aiming to profit from the potential price drop towards the support level. Based on the provided data for Binance Coin, a cautious investment strategy focusing on the short term appears most suitable. The historical price data shows a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast price also suggests a continued downward movement in the coming week, with prices potentially reaching as low as $561. Given this bearish outlook, a short position on Binance Coin is recommended. An aggressive entry point could be around $563, aligning with the resistance level. A stop loss should be set at $568 to minimize potential losses. If the price unexpectedly rises, target price could be set at $559, slightly above the support level, allowing for a profit while mitigating the risk of a significant price rebound. This strategy capitalizes on the anticipated downward price movement while managing risk through a well-defined stop loss and a conservative target price. Based on the provided historical price data and the one-week price forecast for Conflux, a cautious short-term investment strategy appears most suitable. The recent price history demonstrates a downward trend, with the forecast projecting further declines. The current price is close to the support level of $0.1344, suggesting a potential for further drops towards the forecasted low of $0.129. Therefore, an investment strategy involving a short position is recommended. A conservative entry price of $0.138, slightly above the current price, would allow for some room for price fluctuations before entering the position. The stop loss should be set at $0.144, above the entry price, to limit potential losses. The target price could be set at $0.129, aligning with the forecasted lowest price, allowing for a potential profit before the market potentially reaches major support. This strategy aims to capitalize on the anticipated short-term price decline, while managing risk through a well-defined stop loss. Given the provided price information for Worldcoin, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, with the forecast indicating further declines. The support price is at $1.659, and the resistance is at $2.1. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.9, slightly above the current price and the recent lows, would allow for a margin of safety. The stop loss should be set at $2.01, slightly above the entry price to minimize potential losses. The target price should be set at $1.65, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management and aims to generate modest returns in a volatile market environment. Based on the provided Avalanche price information, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history demonstrates a slight downward trend, and the forecast suggests continued downward movement in the coming week. While the support price is relatively close at $23.49, the resistance level at $24.68 indicates a potential ceiling for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $24.00 allows for entering the trade near the resistance level, while a stop loss at $24.68 minimizes potential losses if the price unexpectedly rallies. The target price should be set at $23.00, aiming to capture a significant portion of the projected price decline. This strategy balances risk and potential reward, taking advantage of the bearish outlook while protecting against significant losses. Given the price trends and forecast for Jupiter, a short-term investment strategy appears most suitable. The historical price data shows a downward trend, with the forecast indicating further declines. The price is currently near its support level of $0.8889, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve taking a short position on Jupiter. A suitable entry price would be around $0.932, aligning with the current price and the forecast. The stop loss should be placed at $0.962, slightly above the entry price to limit potential losses. The target price could be set at $0.8889, the support level, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish momentum and aims to profit from the potential drop towards the support level. Given the price trends and forecast for EOS, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near the support level of $0.409. The forecast suggests EOS could drop further, reaching $0.401. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.424 would be ideal, aligning with the recent price action and the forecasted price. The stop loss should be set at $0.4381, slightly above the resistance level. To protect against any unexpected price recovery, the target price should be set at $0.409, aligning with the support level, allowing you to take profits before the market hits major support. This strategy allows for a potential profit while minimizing risk. Given the price trends and forecast for TRON, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward movement, but with recent fluctuations. The current price is near the support level of $0.1584, suggesting potential for a short-term rebound. However, the forecast indicates a downward trend over the next week, with prices potentially dropping below the support level. Therefore, a short position is advisable for a short-term investment strategy. An entry price of $0.163 would allow you to capitalize on the potential price decline. The stop loss should be set at $0.166 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.158, slightly above the support level, allowing you to take profits before the price reaches major support. This strategy aims to capitalize on the anticipated short-term decline in TRON while managing risk through a well-defined stop loss. Given the price trends and forecast for SE, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend, with the current price close to the forecast and near the support level. The resistance is at $0.3966, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For an aggressive short-term investment strategy, an entry price of $0.375 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.39, protecting against any unexpected price recovery. The target price should be set at $0.33, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.315. Given the price trends and forecast for Shiba Inu, a conservative investment strategy would focus on a short-term approach. The historical prices show a slight downward trend in the last 2 weeks, with the current price hovering near the support level of $0.00000169. The forecast indicates a potential for further minor declines, with prices potentially reaching $0.00000175 in the coming week. The resistance level at $0.00000179 suggests limited upward potential in the short term. Therefore, a short position would be more suitable to capitalize on the anticipated price decline. An entry price of $0.00000176, aligned with the current price and recent historical data, would be ideal. The stop loss should be set at $0.00000179, slightly above the current price, to protect against any unexpected price surges. The target price could be set at $0.00000169, allowing for potential profit before reaching the support level. This strategy aims to capture a small profit from the anticipated downward movement in Shiba Inu within the next week. Based on the provided price information for Dogecoin, a short-term investment strategy appears to be the most suitable approach. The recent price history shows a period of consolidation, with the price fluctuating around the $0.16 mark. The forecast indicates a slight upward trend over the next week, reaching around $0.17. However, this upward movement is expected to be limited, as the resistance level is set at $0.1772. Therefore, a long position could be considered. aiming to capitalize on the potential price increase towards the resistance level. The entry price could be set at $0.162. The current price is close to the support level of $0.16497, acting as a buffer against sudden drops. A stop-loss order could be placed at $0.159 to limit potential losses. The target price could be set at $0.17, aiming to capture a portion of the anticipated upward movement before the price potentially encounters resistance. Given the provided price history and forecast for Hooked Protocol, a cautious investment strategy is recommended. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The price is currently near the support level of $0.3326, suggesting a potential for further downward movement. Therefore, a short position is advised. An entry price of $0.35, slightly above the current price and the support level, allows for a small buffer. The stop loss should be set at $0.363, above the entry price, to limit potential losses. The target price should be $0.32, aligning with the lowest forecasted price, allowing for profit taking before reaching the support level. This strategy prioritizes risk management while aiming to capitalize on the anticipated price decline. Based on the provided price information for Aevo, the 2-week price history reveals a downward trend with recent fluctuations around $0.29. Forecast price suggests a continued decline in the coming week, reaching as low as $0.269. Considering this bearish outlook and the potential for further price drops, a short-term short position strategy is recommended. To execute this strategy, an entry price of $0.292, aligning with the current price in the forecast, would be appropriate. A stop loss at $0.304, slightly above the current price, would help mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.2796, the support price, aiming to capture a portion of the anticipated decline. This short-term strategy capitalizes on the current bearish momentum and aims to profit from the potential price drop towards the support level. First, analyze the historical price and forecast of Coin. The historical price shows a downward trend in recent weeks, with the forecast indicating further declines. This suggests a bearish outlook for Coin in the short term. Considering the price trends and forecast, a short position is advisable to capitalize on the anticipated decline in prices. Secondly, we will determine the entry price, stop loss, and target price. An entry price of $0.00605 aligns with the current price and the forecast. The stop loss should be set at $0.00634, slightly above the current price, to protect against any unexpected price recovery. The target price should be set at $0.00567, slightly above the support price and the lowest forecast price, allowing you to take profits before the market hits major support. Based on the provided price information for Coin, the current market sentiment appears bearish. The 2-week price history shows a downward trend, and the forecast further predicts a decline in the coming week. This suggests that the short-term outlook for Coin is not favorable. Therefore, an investment strategy for Coin should focus on a short position. A suitable entry price would be around $0.0172, aligning with the recent price action. The stop loss should be placed at $0.0176 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.0165, which aligns with the forecast's lowest predicted price and the support price. This strategy aims to capitalize on the anticipated decline in Coin's price while managing risk through a well-defined stop loss. First, based on the provided P price information, a short-term bearish strategy appears to be the most suitable approach. The historical price data suggests a downward trend, and the forecast predicts further declines. The support price is relatively close to the current price, indicating a potential for a short-term bounce. However, the resistance price is significantly higher, suggesting that any upward movement is likely to be limited. Given these factors, a short position could be considered to capitalize on the anticipated price decline. An ideal entry point for this strategy would be around $0.00000870, slightly above the current price, allowing for some room for a potential short-term rebound before entering the short position. A stop-loss order could be placed at $0.00000912 above the resistance price to protect against any unexpected price surges. The target price could be set at $0.00000794, aligning with the support price, aiming to capture the anticipated price decline. This strategy aims to capitalize on the short-term bearish momentum of PEEP while managing risk through a well-defined stop-loss order. Given the price trends and forecast for TRON coin, a cautious investment strategy would focus on a short-term approach to minimize potential losses. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests TRON coin could drop from its current price to as low as $4.51 in the coming week. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $4.85 aligns with the current price and the recent price action. The stop loss should be set at $4.93 to protect against any unexpected price recovery. The target price should be set at $4.65, slightly above the forecasted lowest price, allowing you to take profits before the market hits significant support. Based on the provided data for Bitcoin Cash, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a fluctuating trend with a slight downward bias. The forecast further suggests a continued decline in price over the next week, reaching as low as $335. This aligns with the support price of $337.2, indicating potential for a temporary bottom. Given these factors, a short position is recommended. A conservative entry price of $343 would allow for a small profit margin while minimizing risk. The stop loss should be placed at $347.3, above the current price and resistance level, to protect against any unexpected upward movement. The target price should be set at $335, aligning with the forecast's lowest price point. This strategy capitalizes on the anticipated price decline while mitigating potential losses. The provided information for Chainlink suggests a bearish outlook for the short term. The historical price data shows a downward trend, and the forecast indicates further declines. The support price of $10.53 and resistance price of $10.97 also point towards a potential bearish continuation. Therefore, a short-term short position would be the most suitable strategy to capitalize on this anticipated decline. An ideal entry price for this strategy would be $10.90, slightly above the current price and close to the resistance level. This allows for a quick entry into the market as the price potentially retraces. The stop loss should be placed at $11.00 to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $10.50, aiming to capture the potential price drop towards the support level. This strategy allows for a relatively short-term investment horizon, aiming to capitalize on the immediate downward trend in Chainlink. Polkadot shows a downward trend in the past 2 weeks, with a forecast suggesting further declines. The historical prices have been hovering around the support level of $3.752, indicating potential buying interest at these lower levels. However, the resistance level at $3.961 suggests that overcoming this hurdle might be challenging in the short term. Considering these factors, a short-term bearish outlook appears more likely. Therefore, a cautious investment strategy for Polkadot would involve a short position. An aggressive entry price could be around $3.90, aiming to capitalize on the potential for a price drop towards the support level. A stop loss should be set at $4.00 to limit potential losses if the price unexpectedly rises. The target price could be set at $3.70, allowing for a reasonable profit margin while avoiding excessive risk. Remember that this is just a suggestion, and further research and analysis are always recommended before making any investment decisions. Given the price trends and forecast for Near Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Near protocol could drop from its current price to as low as $3.51, while the support price sits at $3.625 and resistance at $4.12. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $3.90 would be ideal, aligning with the forecasted price. The stop loss should be set at $3.98 to protect against any unexpected price recovery. The target price should be set at $3.65, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $3.625. This strategy aims to profit from the short-term downward movement of Near protocol while minimizing risk. Based on the provided data for stacks, the investment strategy should be bearish in the short term. The 2-week price change shows a downward trend, and the 1-week forecast indicates further declines. Price is currently near the resistance level of $1.637, suggesting potential for a pullback. Additionally, the support price is located at $1.458, which acts as a potential floor for the price. Therefore, an aggressive short-term strategy would involve entering a short position at the current price of $1.57. The stop loss should be set at $1.637 to limit potential losses if the price unexpectedly rises above the resistance level. Target price for this trade would be $1.458, aiming to capture a significant portion of the potential price decline. This strategy leverages the bearish outlook and aims to profit from the anticipated price movement towards the support level. Given the current price trend and forecast for Aptos, a conservative investment strategy would focus on a short-term approach to capitalize on the potential for a slight price dip. The historical prices show a recent downward trend, with the forecast indicating further declines in the coming week. Price is currently hovering near the support level of $8.07, suggesting a potential for a bounce. However, the forecast suggests that this bounce might be short-lived, with prices likely to dip further. Therefore, a short position is advisable to capitalize on this anticipated decline. An ideal entry price for this strategy would be around $8.64, aligning with the recent price action and the forecast. The stop loss should be set at $8.94 to protect against any unexpected upward movement. The target price could be set at $8.07, aiming to capture a significant portion of the potential price decline while respecting the support level. This strategy allows for a limited downside risk while aiming for a reasonable profit within a short time frame. Based on the provided data for Litecoin, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change shows a slight downward trend, and the forecast indicates further declines over the coming week. The historical price data also supports this view, with prices hovering around the support level of $64.32. Therefore, an investment strategy for Litecoin would involve taking a short position. A potential entry price could be around $66.00, aligning with the resistance price and the forecasted decline. The stop loss should be set slightly above the entry price, at approximately $66.50, to limit potential losses if the price unexpectedly rises. The target price could be around $64.50, aiming to capture a portion of the anticipated downward movement. This strategy capitalizes on the short-term bearish outlook for Litecoin while managing risk through a well-defined stop loss. Based on the provided data for Uniswap, a short-term bearish strategy appears most suitable. The historical price data reveals a downward trend, with recent fluctuations hovering around the support price. The forecast further reinforces this bearish outlook, predicting a continued decline in price over the coming week. This suggests that Uniswap may be ripe for a short position, aiming to capitalize on the anticipated price drop. An aggressive short-term investment strategy could involve entering a short position at the current price of approximately $7.23. A stop loss order should be placed at $7.4, slightly above the current price, to limit potential losses in case of an unexpected upward price movement. Target price could be set at $6.8, aligning with the lower end of the forecast price range, allowing for a potential profit before the market potentially reaches significant support levels. Bittensor exhibits a downward trend based on the 2-week price change and the 1-week price forecast. The historical prices show a decline, and the forecast suggests further drops. The support price at $420.0 indicates a potential floor for the price, while the resistance at $527.9 suggests an unlikely upward surge in the near term. Given this bearish outlook, a short position is the most suitable strategy for capitalizing on the anticipated price decline. To implement this strategy, an entry price of $450 would be appropriate, aligning with the current price and the forecasted downward movement. The stop loss should be set at $465 to protect against unexpected price rallies. The target price should be set at $400, aiming to capture a significant portion of the potential price decline before reaching the support level. This strategy focuses on a short-term investment perspective, taking advantage of the current bearish momentum and aiming for quick profits before the market potentially stabilizes or reverses. Given the internet computer price trends and forecast, a cautious investment strategy would focus on a short-term approach. The historical prices demonstrate a downward trend over the past 2 weeks, and the forecast predicts further declines. While the support price sits at $7.029, the resistance is at $7.651, suggesting limited upside potential. The forecast suggests internet computer could drop from its current price to as low as $6.85 in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $7.35, the first price in the forecast. The stop loss should be set at $7.53, the highest price in the recent historical data, to protect against any unexpected price recovery. The target price should be set at $6.99, aligning with the forecasted price and allowing you to take profits before the market reaches major support. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Based on the provided data for Artificial Superintelligence Alliance, a short-term bearish investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend with a slight downward bias, and the forecast indicates continued declines in the coming week. The support price at $1.191 suggests a potential floor for the asset, while the resistance at $1.264 highlights the difficulty in breaking through to higher levels. Considering these factors, a short position appears to be the most promising approach. An aggressive short-term strategy could involve entering a short position at $1.23, the current price point near the resistance level. A stop-loss order could be placed at $1.264, the resistance level, to minimize potential losses if the price unexpectedly surges. The target price could be set at $1.191, the support level, aiming to capture the anticipated decline. This strategy capitalizes on the bearish sentiment indicated by the price history and forecast, seeking to profit from the potential price drop towards the support level within a short time frame. Given the price trends and forecast for Optimism, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price hovering near its support level of $1.347. The forecast suggests Optimism could decline further, reaching as low as $1.31. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.42, aligning with the recent price action, would be suitable. The stop loss should be set at $1.46 to protect against any unexpected price recovery. The target price should be set at $1.35, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.347. This strategy prioritizes risk management while aiming to capitalize on the short-term bearish outlook for Optimism. Based on the provided Ethereum Classic price information, a cautious investment strategy is recommended, while the forecast shows Ethereum Classic remaining relatively stable around $18. The recent price history demonstrates a slight downward trend. The current price sits near the support price of $17.58, suggesting potential for further decline. Therefore, a short-term short position is advisable. An entry price of $18 would allow for capturing potential downward movement. The stop loss should be set at $18.58 to limit potential losses if the price unexpectedly surges. The target price should be $17.70, aiming to profit from a modest decline towards the support level. This strategy prioritizes risk management and capital preservation, while seeking to capitalize on the current market sentiment. Based on the provided Ethereum name service price history and forecast, a cautious investment strategy leaning towards the short term appears most suitable. The historical price data reveals a fluctuating pattern, with recent prices hovering around $15. The forecast suggests a continued downward trend, with prices potentially reaching $14. This indicates a bearish outlook in the short term. Given this, a short position is recommended to capitalize on the anticipated price decline. An ideal entry price for this short position would be $15.20, slightly above the current price and close to the resistance level. The stop loss should be set at $15.85, slightly above the current price, to protect against any unexpected upward movement. The target price for this trade could be $14.50, allowing for a healthy profit margin, while still leaving room for potential further price decline. This strategy aims to capture a short-term profit by leveraging the anticipated downward trend in Ethereum name service prices. Based on the provided information for Solana name service, a cautious short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent declines, and the forecast suggests further downward movement. The price is currently hovering near the support level of $0.1975, indicating a potential for further drops. Therefore, a short position is recommended. An entry price of $0.205 aligns with the forecast and allows for potential profit as the price declines. A stop loss should be set at $0.215 to mitigate risk if the price unexpectedly rebounds. The target price can be set at $0.1975, aiming to capture the potential drop to the support level. This strategy prioritizes risk management, while capitalizing on the anticipated downward price movement in the short term. Based on the provided price information for Aave, a cautious short-term investment strategy appears most suitable. The 2-week price history shows volatility, with a recent dip below the $140 level. The forecast predicts further declines over the next week, suggesting a potential continuation of the downward trend, while the support price at $120.27 offers a potential floor. The resistance at $137.42 suggests an uphill battle for bulls. Therefore, a short position on Aave appears prudent. An entry price around $136, aligning with the forecast, would allow for capturing potential downside movement. A stop loss at $141 would protect against unexpected price surges, while a target price of $129, slightly above the support level, offers a reasonable profit target. This strategy acknowledges the current bearish sentiment and aims to capitalize on the anticipated price decline while managing risk effectively. Given the provided price history and forecast for Injective, a cautious investment strategy would favor a short-term approach. The historical price data suggests a downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. Price is currently near the support level of $16.37, indicating a potential for further downside movement. Therefore, a short position on Injective is recommended. A suitable entry price would be $17, aligning with the current price and the forecast. The stop loss should be set at $17.50 to limit potential losses if the price unexpectedly rebounds. The target price could be $15.50, taking into account the forecast and aiming to capture potential profit from the anticipated decline. This strategy prioritizes risk management and capitalizes on the current bearish momentum observed in Injective. Given the provided price history and forecast for Polygon, a short-term bearish strategy appears to be the most suitable. The historical price data shows a downward trend, and the forecast suggests continued decline over the next week. The price is currently hovering near the support level of $0.292, indicating potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, around $0.301. A stop-loss order should be placed at $0.313 to limit potential losses if the price unexpectedly rebounds. The target price for this strategy is set at $0.286, aligning with the lowest forecasted price, allowing for profit taking before the market potentially finds support.